This is All About Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Galen Moore, filling in for Christine Lee, who is on vacation this week. And let's check in on the Bitcoin price, if we must. Not so bad, actually, today. A little bit of a rally, seeing a handful of green 30-minute candles over the past few. It's at about 43,450 at the moment, the CoinDesk Bitcoin Price Index XBX, having shown some support after yesterday's crash around 42,500. It's about up about 0.25% over the past hour and up about 3% over where it was at this time in that post-Fed minutes crash yesterday. And the top stories in the news today: amid the drawdown, Bank of America analysts raised cryptocurrency exchange COINBASE up to a buy rating, up from neutral. Coinbase's stock closed yesterday down 6.7% on the year after the first 3 New York trading days. Coinbase is seen by some investors as a diversifying bet on cryptocurrency as the exchange pulls in the trading fees that make up the bulk of its revenue, regardless of which cryptocurrencies perform better than others. B of A notes a long-term shift of Coinbase trading fee revenue away from retail and toward what the exchange operator terms institutional traders, and predicts Coinbase will diversify somewhat away from trading fees altogether in the coming year, forecasting subscription and service revenue to increase to 16% of the company's total revenue in 2023, up from 12% in the third quarter of 2021. Another indirect Bitcoin bet is getting a Wall Street nod. Publicly traded Bitcoin mining companies are a better buy than Bitcoin itself, according to a research note from Christopher Brendler, an analyst at investment bank D.A. Davidson. Mining firms such as Marathon Digital, Riot Blockchain, Hive Mining, and Hut 8 raise capital and invest in mining infrastructure. Brendler cited the profitability of such firms, predicting they can withstand a price crash even to $10,000 BTC. Meanwhile, on the upside, he notes the relative indifference to the sector so far among institutional investors. And despite reports yesterday that a couple of mining pools had suffered with the late-day shutdown of the internet in Kazakhstan, Bitcoin block production remained normal, and hash rate reported by verified mining pools saw just a 12% dip, concurrent with the Kazakhstan government action, according to miningpoolstats.com. Kazakhstan has become the second largest source of hash rate in the Bitcoin network after the U.S., following the China crackdown on mining activities there. A 12% drop is well within normal day-to-day variability for overall mining pool hash rate. And it's time now for the chart of the day.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Today's chart of the day comes from the CoinDesk annual review, published this morning and looking back comprehensively on data from 2021. The chart shows the 90-day correlation of daily returns across Bitcoin, Ether, and macro assets. This chart in particular is worth a look because it contradicts some of the surface-level assumptions about Bitcoin, other cryptocurrencies, and macro risk assets. One of the narratives of 2021 has been the breakout of Ether, the native currency of Ethereum, and a newly demonstrated tendency of Bitcoin to move with macro markets. But as this chart shows, despite its impressive year outpacing Bitcoin decisively, 407% returns to Bitcoin's 60%, Ether is more strongly correlated with Bitcoin than ever. Meanwhile, despite increasing in the second half, the correlation between Bitcoin and stocks has leveled off around 0.3, what I would call weak and somewhere near the cusp of negligible. Disagree? Dive into the numbers yourself. You can find the CoinDesk annual review on our website at coindesk.com/research/reports. And you can take the knowledge you glean from the annual review and join CoinDesk for a special Twitter Spaces event, Crypto Wars 2022, Battles for Market Dominance, tomorrow at 10 a.m. Our first guest today is Noelle Acheson, Head of Market Insights at Genesis Global Trading. As a disclosure, Genesis is owned by CoinDesk parent company Digital Currency Group. I've asked Noelle specifically not to quibble with me on my interpretation of correlations data. Welcome, Noelle.
Thanks very much for having me, Galen, and no promises.
So what should we make of today's market data? Where are we in this bit of a downturn that we've started the year with?
Well, what we've seen is general market weakness. I mean, the jump in 10-year yields following some unexpectedly hawkish comments reeled in the latest FOMC minutes have spooked investors. I mean, as you know, Galen, rising yields are not good for high volatility assets with no cash flow. And the traditional market behavior is bearing this out. I mean, it's almost as if we're seeing a return to value investing. Remember that?
So should we, what can we think of sort of for the long term? Is the activity in the market that we're seeing today, the response to these kind of emerging information, emerging events, is that the start of a long-term trend, or should we sort of what's the significance that we can ascribe to it?
That's a really good question, because what you've hit on there, the difference between the short-term and long-term movements, is precisely the best way to describe what we're seeing in the market as a whole. What we saw yesterday and partly today, and we've seen this many times over the past few months as well, is that Bitcoin does behave like a risk asset. This is no longer a surprise to anyone, but that is only part of the story. And Bitcoin behaves as a risk asset because that's the part of the market that we see. And short-term and macro investors that buy into Bitcoin for its volatility and its potential return. In other words, investors that buy into Bitcoin because it is a risk asset are going to continue to treat it as such. And that's what we're seeing. They are not, however, the majority of Bitcoin investors. And for instance, the number of Bitcoin, I've been looking at this over the past couple of days, the number of Bitcoin that has been held for over a year continues to head up and is currently over half of Bitcoin in circulation. Yes, over half of Bitcoin currently out there has been held for over a year. And these investors, these longer-term investors, are not treating Bitcoin as a risk asset, or if they are, they're certainly not offloading when all other risk asset investors are. These longer-term investors are treating Bitcoin as a monetary asset, a potential emerging store of value. In other words, the longer-term versus the shorter-term stories are what is driving the Bitcoin price. What we see is the movement, the short-term movement that does label Bitcoin as a risk asset, will continue to do so over the near future, but more, as Bitcoin continues to be sold to longer-term investments, and the on-chain data bears this out, Bitcoin is not just that. Bitcoin is many things to many different types of investors, and that's one of its most resilient features.
So looking at the chart here, the white line showing the price of Bitcoin and that decline that everyone's talking about down from the new all-time high reached in Q4, and we're on the other hand, the orange line showing as you're noting, Noelle, the increase in the percentage of Bitcoin held that has not moved in a year or more, right? Sort of indicating it's being held by a long-term investor who obviously sort of doesn't move the market because they don't really participate in the market, do they?
Exactly. It's not the movement that we're seeing. What we see is the short-term investing sentiment, which is negative right now for various reasons. And that is what is deciding the price. But the longer-term investors, they're still accumulating. The illiquid supply is another metric I've been watching. And this is defined by data provider Glassnode as the Bitcoin that is held in addresses that spend less than 25% of their incoming coins. That is at all-time highs now and currently accounts for over 75% of Bitcoin. Over 75% of Bitcoin is held in what is called illiquid assets. And as more and more Bitcoin gets socked away in these longer-term holdings, that does leave less and less Bitcoin for the traders, for the shorter-term macro investors. And this is one of the reasons why we are seeing continued volatility, less these days than it has been in others. But it could also be one of the reasons why we're seeing lower volatility. I was looking at lower volumes. I was looking at some of the volume numbers earlier today, and spot volumes from leading fiat-based spot exchanges is something like 45% lower on an average daily 7-day moving average basis than it was at this time last month when we had the other very heavy crash that we've seen recently, or should I say correction. Derivatives markets, similar, about 38% lower on a 7-day moving average basis compared to a month ago when markets were, as they are today, in somewhat of turmoil.
So should we then think of, and we talk a lot about the use of Bitcoin versus the use of other cryptocurrencies, and I think that's one narrative that is to some extent hurt Bitcoin. People who are interested in altcoins are certainly talking about the multiple interesting new use cases that can be found there. Is the best use case of Bitcoin locked in cold storage and kind of put away for presumably a rainy day or for a long-term investment?
I hesitate to use the term best because, again, it depends what you want from Bitcoin. And again, that's one of its most salient features, its resiliency, that being many things and different to many people gives it. That there is no one narrative that drives it. So there's no one narrative that can be proved wrong at any given time. It depends on any individual investor's particular time frame.
Great. Well, Noelle, great data and very good insight here. Thanks for coming on the show. Again, always great to have you.
Thank you very much, Galen. Great to be here.
That was Noelle Acheson of Genesis Global Trading. And coming up after the break, we'll speak with Anita Posch on a 50 million Satoshi grant from the Human Rights Foundation and what her organization is going to do with it.
When we say we want to reimagine money, it turns out we're going to the heart of the matter. Imagination has always been a key part of what money is. Imagination in the form of cultural creativity is also something that the cryptocurrency community has in spades. And to the outsider, that can be a reason to dismiss it as frivolous, as something built on nothing. To dismiss it for these reasons, though, is to ignore that all money is imagined.
Yesterday, we learned of a series of grants from the Human Rights Foundation going out to developers and projects working on initiatives beneficial to Bitcoin and its network of users, miners, and validators. Some of the grants went to Bitcoin core developers, others to developers of user-facing software like wallets. Still others were for education efforts or ancillary services like the Lightning Network. One grant recipient stood out as particularly interesting to us. Joining me now is Anita Posch, founder of the Bitcoin for Fairness Foundation. Anita, welcome to All About Bitcoin.
Hello, Gail. Thanks for having me.
So first of all, can you tell us about the Bitcoin for Fairness Foundation and what you're working on?
Yes, of course. Yeah, first, a big thank you to the Human Rights Foundation and Alex Gleitstein for providing us with this grant. It's part of a bigger budget that we have and that we are trying to fill with grants. And what are we going to do with it? Yes, we're going to found the Bitcoin for Fairness Association. And its goal is to bring free Bitcoin education to millions of people, hopefully all around the world, especially in emerging countries, in countries with authoritarian and totalitarian governments, where the banking system is completely broken. In those countries, for those people who need it the most, in my opinion. And that's what our goal is and what we are starting this year.
I want to talk about the specific programs you're going to start with the Bitcoin for Fairness Foundation in a moment. But before we do that, let's talk about fairness for a moment. What does that concept mean, and why did you choose that as the sort of central concept of the organization?
Because I think it's the central property that Bitcoin has over many other cryptocurrencies, or that's the most important property for me for Bitcoin, that it's gives open access for everyone around the world, regardless of age, gender, color, status, wealth, and you don't need an ID. And that's, in my point, the most important thing about Bitcoin. It's not so much, it's of course also for us or for me a store of value, but it's a financial rails. And this is so important for these people who are disconnected from the global economy because they don't have a bank account, they don't have a bank in their area. Banks won't take them on as customers because they don't have enough money or they don't have an ID. And that's a global financial system that excludes billions of people. And our goal is to give those people the tools and the possibilities with Bitcoin to be part of this global economy.
So you mentioned education. I guess that's part of it. What are the other components of ensuring that people around the world in the situations that you described are able to access Bitcoin?
Well, our first goal is to provide free education and to help local communities to organize themselves and give them basically the first tools to start their own communities. We want to help share knowledge to educate the educators on site. And that can be by going to these countries, visiting them, working with them in workshops, providing them with hardware wallets. In many countries in Africa, you can't even get a hardware wallet. So to show them best practices in self-custody of your private keys for your coins, and things like that. And on the other hand, like online, we will provide podcasts. I'm going to go on interviewing the local stakeholders, the developers, the Bitcoiners in those countries, and also building a bridge to our so-called Western countries, because I think we don't talk enough about these use cases. And so it's an educational effort and also a people connecting effort.
Anita, what are some of the countries that are top of the list as you're thinking about starting operations and once you pull together the funding that you're looking for?
Yes, so the most interesting countries in the moment are South Africa. I was in Zimbabwe in 2020 already giving talks and talking with people in Zimbabwe, and I would like to do that again. I'm not sure if it's possible in the coming months because of the COVID situation. Nigeria is on top of my list because there is a lot of going on in Nigeria that we don't know anything about, I think. And then I also want to travel to Central Latin American countries, maybe Brazil or Venezuela. We will see how the planning goes.
Great. Well, Anita, thank you very much for joining us today on All About Bitcoin.
Thank you very much. Bye.
That was Anita Posch, founder of the Bitcoin for Fairness Foundation. And that's it for All About Bitcoin. I'm Galen Moore. I'll be back tomorrow at 3 p.m. for another edition of All About Bitcoin. And you can join us tomorrow at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.